And we are now live here on our YouTube channel. It's our daily show here at Tackle Trading. We call the halftime report. We're here, the coaches, myself included. We break down these markets one step at a time. We're looking at the news, the price action, the charts, commodities, currency, anything that's really impacting financial markets that day. Analyze it all so you guys can better run your daily routine. And welcome back to our show. Got a fun full one planned for you here today. We got Coach Emily joining us as always, lead coach of the Dynasty Investors Trading Lab here at Tackle Trading. We're going to hold another round of the Queen's Court a little bit later in the show where we submit picks for Coach Emily to review and hopefully not chop our heads off this week. Well, we'll see a little bit later in the show. I know the coaches have got some great picks dialed up for that. Zoom earnings kind of highlights the news here of the day. Zoom is down precipitously. It's down big to the downside. Obviously gap down 15-17% after missing on some guidance numbers. Actually, EPS and revenue numbers were fine, but growth is the concern there. And the markets on a Tuesday just keep chugging towards all-time highs, kind of a light range doji. Let's bring the coaches in one at a time. Emily, you first on a Tuesday. How are you doing?
I am doing wonderful. It's very unusual because the house is very quiet because the kids are back to school in person. So it's kind of weird just being in the house all by myself again.
It's quiet.
Very quiet.
Too quiet. I know we all got kids back in school here today. My house is also quiet. My dog's just sitting by my feet, and that's about it here. Matt, how you doing today, sir?
I'm doing fantastic. I'm kind of like Emily, though. My daughter went back to school for the first time in, over a year and a half, something like that. Man, time flies in a pandemic. What do you do? But she went back to school for the first time, and little sad moment, quite frankly. I was sad, Em. I don't know about you, but I was like, oh, man. Let's go back to it took me about 5 seconds before I realized I'm not a good homeschool teacher. And so I was like, okay, she's in the right spot. But no, it is a little more quiet these days, Em. But I'm excited to be here for with the halftime crew to break down the market activity.
And Mark, how you doing today, sir? I know it's 90 degrees outside, and yet you're looking like you're ready for winter. How's it going, my friend?
I'm glad my comfort level is of such importance to you. Listen, I am pleasant as a peach today.
Pleasant as a peach, peaches bruise easily. I don't know if
we're talking about ripe peach.
Listen, my count's up. NFL football season's coming up. I get to root on my Washington football team to their path of glory this year.
Emily, this is not good for you.
This is leaning in.
This is not good for you, Emily. This isn't good for anybody, actually.
I know what he's doing. I know what he's doing.
Yeah. I was thinking about old Nick Cage in Face Off when Mark was talking about peaches. Great movie, by the way. Let's roll. I could eat a peach for hours as well.
First of all, peaches are amazing. All right, let's light it up. Let's go here. Doji here on the S&P, man. Obviously, the Dow's hanging out right near resistance. What are you seeing in these markets right now?
Well, after yesterday's follow through confirmation Monday there, you see a little bit of a doji action here today in the S&P 500. Not a lot of price action to speak about. From yesterday's close, you just saw a little bit of a breakout from an intraday perspective, fade right back down during the overnight session, back to where we started yesterday. And that's what creates a doji, a little bit of up, a little bit of down. Little bit of random nothingness when you look at it on a 4-hour chart. Come back out to the daily chart. You're just navigating that breakout confirmation we had yesterday, but nothing to be concerned about from a technical perspective in the S&P 500. Now, when you look at the other market indexes, the Dow Jones hovering right underneath that breakout channel. Definitely keeping your eye on 35,500 this week. Obviously acted as a resistance level the last time we tried to test that 35,500 level. Consolidation slightly south of that, but you can see the importance of that 35,500 level when you put this on an intraday. As you can see, the market yesterday during the late Asian hours, early European hours here, market tried to kind of break out with the price action coming into Europe. Where did it tick into? Well, that's just 8 points south of that 35,500 level. So definitely keep an eye on that as we navigate that breakout. And once again, if the Dow does break out The two sectors you're going to take a look at here is the industrial sector. You take a look at this on a weekly chart. Look at that 106 level. Nice little violation there. Could see a 110 tink there, which would be a very good trading environment. So keep an eye on that. But the sector I think that would be the most beneficiary of this type Dow Jones breakout would be the financial sector. As you see a little bit of cup, a little bit of handle forming over here. I love cup and handle formations. And the reason triggers are easy and the psychological behavior of cup and handle formations is fairly easy as well. As you see the cup form there, you see that higher level of support that coincides with the old breakout channel over there. That's why all of us coaches and many market participants was really enjoying that nice little bullish retracement. Comes back up into resistance, kisses off the exact same resistance that held resistance in the previous range. Now what happens? You see that little short-term increase in support. That's important in the cup and handle, as psychologically, yes, continuation neutral pattern, but the buyers still control there. And that gives you a little bit of nice technical pattern if you do get that $39 breakout. And so if you're looking at the Dow with 35,500, I'd be looking at the financial sector as well, looking at that for confirmation, secondary confirmation above 39. Now, when you come out to the NASDAQ, which was where you saw a little bit of the upgrades at tackle trading and a little bit of momentum coming into the NASDAQ recently. You see nice price appreciation, high base breakout on Friday, confirmation Monday yesterday. Nothing to really see here, guys. You're 2 days into the breakout, following a nice momentum recovery after 50-day moving average. Looks like a very healthy chart. You're just in the middle of a range right now. So a little bit of lack of news today not propelling the market, but technically the market does look fairly decent. Then when you come into the Russell 2000, I like the psychological changes I'm seeing from a technical perspective. Reclaiming the 50-day moving average was important. You see it act as resistance over there, and then you reclaim the previous pivot point as well, right there at that 2250 handle. That's acting a little bit of a support level as that 9 EMA starts to catch up. And what I'm excited about in the Russell 2000 is you don't get a lot of opportunities. Well, I don't want to say that. I want to say this. You get a lot of opportunities, but they happen over time. Mm-hmm. And so when you see the Russell 2000, this is one of those moments where I do believe the Russell 2000 has the ability to break out. Now, obviously, we're technicians over here at Tackle Trading with a little bit of fundamental backdrop, but when you're looking at the Russell 2000 here, technically you got a little momentum over the course of the last couple months. You got to like that shift in volatility on the weekly chart. That is obviously looking at the shift in volatility here on the daily chart. I'm seeing it look like a little bit of this trend here when you finally came off that low price, reclaimed the 50, nice little, and then it rolled the 9 EMA as it came into that breakout channel. Look at the momentum shift. You got to like the momentum shift here. You got to like the fact that it's reclaiming the moving average. It's reclaiming 2250. You got to like all of that. We're still a little bit away from that potential breakout, but I do like the data going into it. So keep an eye on some of those small caps as they start to form up a little bit. And again, stocks will reverse before the index shows you something. And so I do believe coaches at Tackle Trading and the Tackle Traders going to be hunters a little bit in the small and the mid caps to find some good little opportunity there as well.
Love the rundown there, Matt. Appreciate that. Emily, how are you approaching these market conditions, right now?
Same as always, nothing's changed. If it ain't broke, don't fix it. We did have that opportunity last year to go bullish, and we did have that breakout on Monday on a couple of these areas. But still, it's mostly cash flow. We're looking for those directional trades that you can take advantage of. But business as usual, cash flow. Did I say cash flow?
You did say cash flow, which is obviously business as usual, which is what Coach Mark loves as well. Mark, Doji Tuesday here, light range in the market, opportunity everywhere. Go ahead, Matty.
I have your cash flow strategy for Queen's Court later.
We'll see.
Just throwing it out there. I know that's what you're looking for today.
You had one last week too.
You're not looking for aggressive growth. I did. We don't need to talk about last week. We don't need to talk about old stuff.
We're on to Baltimore.
It's football season. On to
We're on
this.
to Baltimore.
We're on to
this.
We're on to Baltimore.
That's right. That's right. Mark, what about you? Read on the market, big picture right now.
Listen, every morning I wake up and I go through a process. Just what is the broad market doing? Where there's relative strength. Yesterday, it was tech. Today it was slightly, some of those cyclicals. It really is a rinse and repeat. What are you doing? I love how Emily phrases that. I can never do it with the pizzazz that the Queen does, but find great companies, find great technical situations, have a management plan, and then just rinse and repeat. And for investors, try to pick those great companies and manage them accordingly. And for traders, you use it in technicals, and it really is rinse and repeat as this market continues to take turns, right? When I looked at the market, I'm always looking at defensive stocks. They're doing well again today. There's just so many choices right now on how you want to allocate your money. And that's a good thing. Blessed with a plethora of choice right now.
All right. While we got you, Mark, let's do commodity roundup if we can right now. Obviously, we got OPEC meeting starting tomorrow. I know that at the end of August here, last trading day of the month, it's going to be the worst month for oil in quite some time. Had some good selling there throughout the month, although it's battled back, looking for a potential breakout. What's your read on the commodity market?
Well, listen, and on those OPEC, because I remember that was one of the first questions in our preparation yesterday. Asked listen, I've said for years, with the exception of that little blip where they decided out of nowhere to go to war with Russia over oil prices, those Saudi princes have your back. They have been very firm in what they have said. Their rhetoric has been spot on. Caution, maintenance. We're going to gradually increase production to meet up with potential demand. So I believe the rhetoric will be out there. So, once I have that fundamental backdrop there, and as long as production numbers in the United States aren't too, worrisome, which sometimes you get over the years, then I just turn to technicals, and then I learned to opportunities, and nice bounce, right? Nice bounce consolidation here. Have we drawn a bigger box yet? Are we in a really, really big box now? What do you think, Matt?
Where is the box right
Where's
now?
the box? Because it's important. I say it jokingly, but that's for
The
oil.
same box.
There's the box.
That's one of the things you learn in commodities. Like there's been times silver has gone in their box, their consolidation box, for like 18 months.
Oh yeah. Commodities can stay stagnant forever.
For a long time, and that stagnation, while it sometimes can give directional traders fits, can provide a lot of cash flow opportunities. So, I added some oil exposure yesterday, looking for opportunities to, find good companies. And I think there's a lot of them in the energy space, and as long as you have some version of consolidation, these price levels are very, very healthy for energy companies. And so unless you get a fundamental shift somewhere along the way, I think it's rinse and repeat cash flow on your preferred energy company.
Matt, anything you want to add to oil?
Yeah, I would say, you're back in the box. There's no doubt about that. And I definitely do see the box between 65 and 75. You're currently pinging right around $69 a barrel. The 50-day moving average is slightly north of 70. You're right there in the middle of the longer term ranges. Yeah, directional traders aren't going to be loving these types of trading conditions, because if you look at the Russell 2000, what's the entire analysis been outside of individual components of the Russell 2000 in the last 8 months? It's all been cash flow, right? State board, state cash flowing. And so you're looking at a similar environment outside of a very short-term dip in front of the hurricane, and obviously some news from last week. And we've had a lot of geopolitical situations that obviously impact the energy space, because crude is a global economic tradable instrument, an asset class. And so you've had a lot of volatility around news over the course of the last few weeks with crude. It did, see a nice little break of that $65 range, but a quick journey back up within the range. And so, yeah, I definitely can understand why somebody would say a little bit wider range volatility, but I see this as a short-term test and a little bit of a fake out of the 65 handle. So I got it back in the box between 65 and 75. And I think the cash flow side of the equation, both in the energy field as well as crude oil specifically and crude oil tradable instruments, are still looking at those bullish cash flow strategies with confidence.
You know,
And
Matt, I
quite
have a
frankly, I
question.
think they start picking up energy stocks to do even more of it.
I have a question for you, and it's something I've seen on charts from high volatility to commodities, and it's a phrase that I've heard you and Frank talk about. You know, that bear stop out candle, and the psychology.
That's the bear stop out candle. We're not there yet on this, but finish your point.
Well, I mean, that candle 7 candles ago, where you had broken short-term support, and then you had that surge. You know, where bears are in control, and then boom, there's that candle where all of a sudden they're like. Anyone that's short is like, you know, like
bear stop out is the candle on the bearish retracement where all the bears are getting really excited, and then it just blows through the resistance level, and it you got to think about it like this. How many times do you have a bullish trade on and it violates short-term support, and how do you feel at that moment? Like, how do you feel? Like, just describe it. How do you feel?
When support breaks?
Okay, so you have a bullish retracement. You confirm on the bullish retracement. You get into the trade, and then it snaps right back down and stops you out. How do you feel?
It sucks.
Okay.
Like
now, think about the bears for a second. They don't, like, you're sitting there gushing about how much bullish opportunity you have. You sound like you have America First problems here, bro. Like, I have these many problems and there are too many opportunity. It's good to be an American. But bears, they don't have that many opportunities. They don't. They don't get the same degree of bearish retracements as we bullish traders get on the bullish side. They don't get the same degree in terms of quality breakouts that or breakdowns that we get on the bull side. Now, sometimes when they get them, they're powerful though, and there's a little bit of herd mentality on those bearish type picks for the bears. They kind of crowd into them, and then all of a sudden, bear stop out day is here. You see, and again, it never happened because it never technically confirmed here. But it's still psychologically the same thing. Here you see this as a bearish retracement coming into the 20-day moving average. All the bears look at this movement here and they're like, ooh, if we just get a repeat of that, we're down here and we're going to all get rich, right? That's what they're saying. We're all going to get rich down here. And they're all getting excited and they're counting their dollars before they're even made here. And so we're going to get rich because look at that, how easy it was to make money there. It's going to be that easy to make money here. And so they all get excited, right? They all get excited. And then it just blows their trading plan out the door. And they're like, wait, we're not going to get rich? And they have this collective sigh of now we can't do anything. Because once the bear gets stopped out, the bear just wants to go hibernate again. They don't want to chase this price. They don't want to get smacked in the face again. They don't want to go through a repeat of everything they've had to see in the last year and a half from a bear perspective. They don't want to look at the fundamental backdrop and then say it yet again, how is price going up in the face of all of this negative economic data? And they don't want, so they just move on. That's bear stop out day. It's the technical event that destroys the bear's psychological mentality so that they run and hide. We never really got it, but psychologically they would be that candle there. And so it's the candle that blows up the bearish retracement is what it is.
No, it's been a big, huge, like when they have occurred, it's got a really good track record in 2021 of producing price stability. And price stability oftentimes creates those upward mobility moments.
Yeah, what it is technically is it's a V-shaped bearish breakout that becomes a bullish momentum trend is what it is technically, but bear stop out day just it makes you remember it a little bit more.
I love that explanation, young Tanya, and mark that. I want to pull that and put that in our glossary. That was really cool. Bear stop out day, one of the tackle trading lingo items. Matt, we got to bring back the bingo card at some point. I love that, guys. That's awesome. Has bear stop out day occurred?
Can I say it's when you try to destroy the bear's worldview?
When you try to destroy the bear's worldview, you can't destroy a bear's worldview. No.
Oh, yes, you can.
You cannot. No. They always hold that worldview. They just hibernate for a while, come back up.
That's true. That's true. You're right. I'm wrong.
You can make it go hibernate for a few minutes, but yeah, absolutely.
It's never bingo till the word pinchy poo is brought up in technical analysis.
I got to tell you, bro, that never made the bingo card.
That's never,
Sorry.
that never made it.
Never-
We put a kibosh on that one, bro.
Never made it. Gold next here, guys. Let's keep moving through the
Yeah.
markets. Crude oil back in a box. Love that breakdown there. Gold, though, obviously, it's come back up in its little bit of a box. And Matt, what you read here on gold? You've been highlighting this one for weeks now.
Technically, again, you see this right here, this candle? Oh, that's bear stop out day right there. You might think that's bear stop out day. That's not. That's bullish flag confirmation. This is bear stop out day. That's the candle that changes the psychological nature of the chart, is what it does. And so at this point here, you're looking at this as a bearish retracement with confirmation underneath 1775. Never occurred. You got the bear stop out day, reclaimed all those moving averages, the 9, the 20, the 50, reclaimed the horizontal 1800 psychological zone as well. And then the 200-day moving average 2 days ago it just didn't even care. Did not even care. And so psychologically, you're looking at a nice little bullish moment here, as even today you rode the 9 a little bit. You're starting to form up between 1800 and 1825. You know the zone that I'm looking at, guys. I'm looking at that 1836 ultimately. Still think we got some work to do to get there, but I do think confidence is starting to build here in the gold areas of the market. Not directionally. I do think that starts with a little bit more consistency in technical formations between 1800 and 1840. But with gold showing the defensive, if not aggressive offensive behavior above that 1800 level over the course of a couple candles over the course of the last couple weeks, you got to like that. I just come back to this, and I've said it a lot over the course of the last week and a half, 2 weeks. You take a look at the gold miners here. The gold miners have not had that same degree of technical formation where gold just drove upwards in price. Remember, gold came off these exact same lows when you look at /GC here. Let's go back to the futures contract. You see these same lows from over here in March and April, 1680. Look at that quick journey down to 1680. Nice quick recovery off that. Nice little V-shaped recovery off that. What I said last week, what I'll say this week, what I'm saying today, if this price movement is true, and all we do is stabilize. Don't get the same degree of momentum. Don't get nice little breakouts. Don't get a great bullish trading environment. If all we do is stabilize here, you got to come to GDX and feel that stabilization and recovery in the gold chart will lift up this area of the market as well. And whereas there is a lot of concern fundamentally about this marketplace, there's a lot of concern about valuation in this marketplace. We're talking about an area of the market that is not overvalued from a technical or a fundamental perspective. You're talking about a sector with a 14 PE ratio right now and a 15 forward PE ratio, and you're looking at GDX specifically at the low prices there. So once again, if gold stabilizes, GDX sitting at very important historical support levels, as you can see on this weekly chart. Old resistance, new support, new support, new support. That is a foundation that you build a house on, ladies and gentlemen. That's the strength of that support level. Like the $30 backdrop of support as well. You got a nice zone between 30 and 31 there. I don't think you're looking too directionally at this point, because once again, you come to a stock like gold, you look at the same degree of analysis, but you bring it back down to a daily chart. I like the quick little head and shoulder reversal, but you got a nice little cluster of all these moving averages. You got a ton of chop to the left of the chart. I don't like it from a directional perspective, especially because it has been underperforming gold. Remember, the analysis is about catching up. We haven't seen it yet. You just love the zone you're in, which means I do like it from a cash flow perspective, and the accumulation starts to begin from a cash flow perspective. And then once these charts start to shore up a little bit, we start to see true reversal patterns. At that point, you look at it from a directional perspective.
Love the breakdown there, Matt. And I know that we've got a little bit more gold analysis a little bit later in the show as well. So we'll kind of
that is my Queen's Court pick. But I'll just say, hey, Queen, you remember what I said about gold? Hey, gold is my pick. It's a covered call pick, but yeah.
Absolutely. Looking forward to the cover call analysis there. And by the way, the
it's
breakdown.
still a 40 Delta cover call on it. We're good.
All right. So fair enough. Let's move into Bitcoin real quick, then stock talk. Then we're going to play Queen's Court here in just a few minutes as well. Bitcoin kind of hanging around, man. Obviously, you got a little bit of a change. We downgraded this a token 5 yards for a reason last week. We see the momentum rolling over just a little bit, hesitating at 50K. What's your read?
Yeah, we talked a little bit about this over the course of the last couple days, but specifically here, nice little breakout, holds the line at 50K. And I remember you asking me on that day, should you be concerned about 50K? And I said, not really. It's outside of a psychological number. It's not really historically defined. 52 may play a role, but I did say 50 wasn't historically really important from a Bitcoin outside of the psychological factors. I was wrong. Bitcoin was right. As you've seen the consolidation over the last week, right there south of that 50,000 level, it certainly did play a role, and especially with comms breaking out and technology breaking out and growth being the flavor of the day over the course of the last few days. In the market, you would anticipate a little Bitcoin price appreciation in that environment. Haven't got it. Once again, 50,000 playing a role from a technical perspective. Now, the importance of that is it does reset this from a trading pattern perspective. You do have to take into account 50,000 at this point. Love the flag here. That's kind of the opposite of the bear stop out. Kind of blows up that flag-based pattern. Talked about that with Coach Frank on Friday. That was a very difficult candle following that flag off the 9. That changes the psychological behavior of the pattern. It now looks at a little bit more of short-term consolidation than it does more of a flag. Once again, the importance is subtle but important. Short-term consolidation, whether you call it neutrality or high base, you're not trading within the base. You're not trading within the neutrality. A flag, such as what you see the first 3 days of the retracement here, that can certainly be traded according to the step system with a break back above the high of the day and a little front running action as we go into that 50K breakout. Given the consolidation over the last 5 days, though, that changes that behavior. You're looking at a breakout of 50K at this point.
Yeah, I think so, obviously. And I appreciate that breakdown. One of the things I like about doing technical analysis with you on a day-by-day basis is we have that conversation as it's shaping up. And exactly what you guys were talking about on Friday has now kind of confirmed the last couple of days for me. So appreciate that. Let's move right into
it's like
stock.
anything else. You got to get ready for things. You got to get prepared for things. But then when things don't occur the way you visualize in your eye and in your mind's eye, you got to update it. You just got to update a little bit. And it doesn't take long. But you got to update it from a technical perspective.
I agree. Every day is a new part of the conversation that's ongoing in markets. So absolutely. All right. Stock talk here. Oh, sure. Go ahead.
Oh, I was just going to say, hopefully that Team Tackle get some of those updates from us on a daily basis.
I think so. When you show up regularly, when you get the butt in the seat, which is something I've said forever, you got to have seat time. You got to be there. You got to be watching charts. You got to go through the markets. That's how you build your skill sets. So I think so. Yep. All right.
And it doesn't mean you have to be obsessed with every nuance of every red and green candle, but living that broad picture, it is so helpful.
Yes, you do not need to be me and obsess over every.
Yeah, I mean, literally, you just need to check in. And hopefully your financial future. Well, we know that Team Tackle, but you don't have to be obsessed about it. Just check in,
run your routine. Absolutely. All right. Stock talk next here, guys. Zoom earnings.
Well, I'm going to check into some Zoom earnings right now, bro. Let's talk about the miss
story today. Absolutely.
Well,
all I know is if we get kicked off in this segment from Zoom, I'm just saying.
Zoom, I want to tell Zoom, I'm going to tell Zoom one thing. Zoom, one of the concerns in your earnings report is small businesses. And Zoom, we are that demographic. So it's not us that needs to upset you. You need to make us happy. That's how it works. Because that's the concern in Zoom's report. Is Zoom makes 36% of their revenue, which came in slightly over $1 billion. By the way, congratulations to Zoom. They achieved $1 billion, their first $1 billion quarter here. I know we talk about Apple with their first $100 billion quarter, but Apple's been around for a very long time. Zoom, recent IPO, popular trading company, obviously exploded in popularity last year, but you got to give credit where credit's due. And $1 billion, revenue, price on Zoom's quarterly report happened far before anybody anticipated here, far before. But that's also one of the problems in the report here today. They may have just gotten slightly ahead of where they should be in their evolution of a company. And when you're looking at Zoom, Zoom came in at $1.36 per share versus the expectation of $1.16. That is a very decent beat on an EPS number. Revenue came in at $1 billion versus the $991 million expectation. That's not where you want to be on a revenue perspective. It does come in officially as a beat though. So EPS beat and revenue beat. Guidance was at best mixed here. They did lower quarterly guidance. We've seen that with a lot of companies recently, that companies are lowering their quarterly guidance due to a little bit of the economic concerns that the Delta variant does put out there. But here's the question I have. Why would Zoom do that? Why would Zoom lower guidance for that for that same reason? That's a little concerning. Now, they didn't touch their end of year guidance in their 2022 guidance. In fact, they probably slightly upped the lower end of the range, but I'm going to give it officially within the range. And so Zoom had a very mixed report from an earnings perspective. But here's the problem with Zoom. Once again, you're talking about a company that exploded beyond anybody's reasonable expectations during the pandemic. And it's simply coming back to earth a little bit. That's all that's happening. It's simply coming back to earth a little bit. And what I mean by that is during the pandemic, Zoom beat revenue estimates by a whopping 64%, 33%, 13%, and then 9%. What are you seeing over time happen? Over time, what's happening to the revenue beats?
Well, they're obviously not going to be beating as big or as large as in the margin expectations. Yeah.
They have the same expectations. No. They have increased expectations.
But they're just not beating as much.
They're not beating it them.
Yeah. Right.
And so they're not achieving what is expected from a growth perspective. And then when you come in this quarter at 6%, it simply adds to that overriding storyline that Zoom has really struggled with. And that is simply this. You went from a company that was honestly, and I'm not patting tackle on the back here, but I'm going to pat tackle on the back here, that was only talked by people that were like tackle. It was on our 2019 Dirty Sexy Money list. It was only talked by people who used the technology. We loved their technology. We liked their company. We loved their technology in 2019. We thought it was a great opportunity for growth. And then going into 2020, you're talking about a company that went up 360%, just went gangbusters. And now over the last 4 quarters, they're contracting. And so quite frankly, simply this, growth companies have to do what?
They
grow. And simply put, Zoom did that 5 to 7 year growth in a year last year. And so they simply got a little bit in front of themselves, and now just longer term fundamentals have to catch up to this. It's a company I like, but there was a reason we axed it from the Dirty Sexy Money list coming into this year. We had valuation concerns coming into this year. We had growth concerns coming into this year. I remember looking at this company last year coming in for the Tackle 25, and I was just like, there's no way it can come close to repeating what it did last year. Even if they get it right, it's going to be damn near impossible. And that storyline, just unfortunately for Zoom, has played out this year. I do think it's a good company. I think it has valuation and growth concerns, but I do like the long-term prospects of the company. But this is a company, if you are an investor, you're looking to manage the downside risk here, and you are not looking to accumulate simply at the low prices. You're looking for some type of deeper type retracement, deeper type of value opportunity. And quite frankly, that might be some time on Zoom.
And I dug into this report a little bit yesterday, man. I appreciate the thorough read there, because obviously you've got a good feel for this one. There's some things that if you were writing a presser on this one, you could highlight all the positives of, right? I mean, there's so many different good takeaways from this.
Absolutely.
Right? Income on the quarter was up quarter by quarter. Income was up year over year, first $1 billion quarter, like you mentioned. They do still have growth within that company. User base is expanding in certain ways. But when you have valuations at these levels and you're not growing at exponential rates, the market eventually is going to bring you back
Well,
down to reality.
and again, we're only talking about a company with 119 PE ratio. Like, and I say only,
Mhm.
but we know the backdrop of some of these companies like Zoom had back in the day, right?
Mhm.
I mean, I'm old enough to remember Amazon with an 800 PE ratio, guys.
Me too.
I'm old enough to remember that terrible burrito company with a 900 PE ratio. I'm old
Mhm.
enough to remember those things.
Hey,
So
listen,
100
I got a Queen's Core pick that will make
CMG, bring it, baby.
Zoom's PE
Bring it.
ratio look like a
Bring it.
reasonable value.
Let's bring GoPro, the VIPs, and CMG all to date. Let's do it. But when you're looking at Zoom, you simply have some overriding value concerns. But the only reason you have value concerns is because the growth isn't there.
Yeah.
If the growth was there, you could psychologically just say, yeah, who cares about the payment of 120 PE ratio when if they grow, that PE ratio is going to be 70 by this time next year and 50 by this time 2 years from now. But companies like Zoom, again, you got to grow. It's very simple. Growth companies got to grow. And right now, Zoom's contracting the velocity of its growth right now.
Well, and technically now you're gapping into long-term support, but there's nothing down here that makes you feel confident at all. Like you said, I mean, if you're an investor, you're protecting, you're not thinking about accumulation at this point, I don't think.
Well, no, I don't either. And until Zoom figures out retention on small businesses, like they do a really good job retaining those big market clients, the big corporations. But once those big corporations select a communication device, it will take hell to like freeze over for them to change because it's such a nightmare to integrate that within your company when you're dealing with 100 employees, 500 employees, 50,000 employees. That's really difficult to change. But for small businesses, they can change on the fly. And right now, 36% of Zoom's revenue of that $1 billion, 360 million, is companies like Tackle Trading, small businesses that pay Zoom a lot of money over time. And those types of companies, obviously Tackle's not the great example because we're a digital company. We all work from our homes. But there's a lot of those companies in the last year that only use Zoom as a stay-at-home type opportunity and just as a bridge to where they could come back to work. And right now, I know the Delta variants, there's a lot of concern there right now. But for Zoom, the concern on that on those companies with 10 employees or less is they're all going to start going back to work over time, and they're not going to need Zoom to the same extent. So once again, Zoom's got to figure out a little bit of that retention for those small businesses. But at the end of the day, we're talking about a high valuation on a company that's contracting growth.
And they've got opportunities here, to fix some of those problems long term and still, all those kind of things. So I'm not writing the company off by any stretch of the imagination. I don't think you are either. Nobody is.
I'm not.
Yeah.
But I would like to see some more advancement on some of their merger and acquisition strategy and where they're taking their company. Because if their company's just the public face of Zoom of the way we know it, yeah, they were first position last year, but let's not act like they don't have stiff competition for that.
A lot more competition's fired up, no doubt about it. All right, sounds good. Any other earnings roundups here, Manny?
You know what? Yes and no.
Come on, do it.
Fine. Chico Foz. Had to.
I'm
Chico, please do. No, this one's for Coach Mark and the Vikings out there, the cash flow Vikings. For Chico Foz here, one of Coach Mark's darlings from last year. Let's take a look at a little bit of the backdrop. This was where he was.
This was
loving
a huge
that
winner for me.
accumulation.
It was a huge,
this is a big winner here. Big winner here. Let's talk about their current earnings report, though. And when you look at the current earnings report, let me see their numbers. 21 cents against an expectation of a -8. That is a very decent beat on EPS numbers. Revenue actually came in very decent as well, 472 million versus the 407 expectation. We're going to give that the official beat and the beat. The problem, when you see a beat and a beat and a price destroyed, what's always the problem, guys?
It's always guidance.
always
99.99% of the time, it's always
It's
guidance.
always guidance, and that's the concern here as well.
And the other 0.01% is when the CEO got caught with somebody dead in their trunk. But other than that, it's always guidance.
We'll have to put that one out there as well, I suppose. But again, maybe 0.0000001%. But outside of that one, yes, 99.99999% of the time, this is all about guidance, and that's what Chico had problems with. Very Zoom-like, lowered the quarterly, maintained the yearly, concerns about the upcoming quarter. I think companies are a little concerned about September, October, and November. It seems like a little bit out there. So a little bit of gap down, very similar gap down to what you're seeing on Zoom here. I don't love it at 5, Mark. I kind of like it at 5. And I don't I'm not looking at Zoom at all. Like Zoom's got to answer some questions for me, right? And some questions take time. Chico, I was telling you this in pre-show. I've never been interested in Chico, but I'm kind of that dude that saw my brother make a ton of money on Chico last year, and I didn't. And so I'm like, I can't allow that to happen.
There's nothing wrong with the hate put.
Okay, so but you got to recognize when it is, though, right? Okay, so I recognize it.
There's everything wrong with a hate put. What are you
I've made money. Like Tim will do something and I'll be like, screw that. I don't believe in it, but I'm not going to let him make money without me.
I got Disney and shorting stories from Disneyland that I could just go off on right now. Yes, the hate put, maybe I don't make money on it, but damn, does it make
I'll
me
be
feel
damned
good
if
in the
he makes
moments.
money and I don't.
Like, it's like, this is better counseling. This is better than any money I pay any counselor, any throwaway money. But I kind of like it at 4. Talk me out of 4.
Now, listen, I've been diving into this report this morning. Chico is one of and it's a common story for me. I see something bottom fish. I like this story. It often involves a new CEO taking the company in a different direction. That takes some time, right? You see that turnaround. I thought it got really crushed and unfairly beat up, and I thought it had a huge margin of safety. Now, with any stock, whether it's Zoom or Chico Foss, when it goes up 8 billion% in a short amount of time, listen, you got to call the brakes, But there were things in that report that the return to profitability, some of the branding things they're doing. I think the company's heading in a nice direction. So if we get a deeper dip here, and get some more of that margin of safety where I can play in the low 4s, high 3s, I'm going to be back in for a starter position.
And, Chucky, I kind of feel like Chico is getting beat up a little bit due to Zoom because there's some similarities. There's definitely some similarities here. You have both beats. You have guidance similarities, but thank you, baby. But unlike Zoom's only 6% growth year over year, here's Chico Foz with the 54.2% year over year growth. And so I look at a company that certainly has valuation concerns and certainly has some forward concerns, but a dip here and a little bit of a deeper dip. Again, I like to handle 4, but a little deeper dip, I could certainly be interested in Chico. Yeah, I'm not interested in the same dip on Zoom, by the way.
No, different analysis, I think, obviously. I mean,
listen, if there's anything I know, it's women's clothes. So
fair enough.
I have no commentary to that.
With that, I'm staying away from Chico Foz continuing. So
yes.
That's my
Queen. Queen, what would you like to say about that one, Queen?
Let's just put a stop loss on this.
In fact, let's just start Queen's Court and let's have Mark start.
I got one more thing to say. Chico Foz.
By the way, you made Jonathan Julian's day over there. He gave it a big LOL when he heard that. So hashtag Team Tackle deep cut right there on Chico Foz. I only had one other stock story, and that's Robinhood. I just wanted to mention it real quick, HOOD if we can. Gary Gensler from the SEC says that they may absolutely ban the payment for order flow. Big part of Robinhood's revenue is order flow. It's been in the news the last day or so.
Who said that?
Gary Gensler from the SEC chairman says they may ban.
Is he the same guy that fined Elon $20 million? Elon laughed at him?
I think so.
No, this is Gary.
Is he a new chair?
He's a new chair. Okay.
Yeah.
No, but no, I think the exact quote was, it's the banning the order flow payment is on the table. he says.
He said it was on the table. So
That's much more than just a Robinhood story. Then every broker does that.
yeah, it is a big story if it does happen, but as he just mentioned it in an offhand comment when asked about it, so I don't see it.
I get it,
Mhm.
but I don't think it's happening.
Yeah, I don't know if it will either. That's big business we're talking about. And every
Yeah,
broker.
that's big lobby money in DC.
That's
I mean,
Do either of you
huge
have
money.
any interest in
big
Robinhood?
lobby DC money. So
Like, because
I don't know.
I've tried to dive in. I've tried to build a thing. I just don't believe in the
I
company.
don't have a long-term fundamental view on Robinhood, but yes, I maintain the statement I made on IPO day. I do look forward to trading this company. I just think it needs to find some consistency first. And for me, you've had your first earnings season. You're starting to get some moving averages out there. You see the 20-period moving average here. Obviously, you got the 9 already. You start getting another couple weeks, come a few weeks. You get 50-day moving average, get another earnings season behind the belt. You see the market response to it. You start to do some price projections on it. Yeah, I do think once you get enough data to get a consistent price projection, Robinhood's going to be a fun company to cash flow and trade.
Mhm.
I don't have a long-term any desire for an investment here. No.
Yeah. And Dina asked, what is that and what does it mean? Order flow is where they sell the transaction
sell your
data from
orders.
their own users to
Yep.
hedge funds to front run in front of them, Dina.
Basically, they sell your data, and then hedge funds take the opposite end of the transaction much faster than you do. We don't like it.
We do not like
at
it.
all.
It's our biggest critique about Robinhood for a long time.
Yep,
We have
we don't
others,
like it.
but it's been one of them. All right, let's move right into Queen's Court from there. Then stock talk.
Can I give one Apple Google news very quickly?
Yeah, sure.
South Korea here today. This is big news for hypothetical potential news stories coming down the pike. But Apple and Google in South Korea can no longer have the monopoly of forcing developers to use the Apple and Google payment systems, which Apple and Google commission about 30%. Just something to put on the radar if you're an investor in Apple or Google. Not a real big story right now for their revenues. I don't think you're going to be updating anything from a fundamental perspective, but it's something to keep an eye on because we've seen court cases in the U.S. You have the Epic Games versus Apple from earlier this year. Those are going to be ongoing. You had the congressional hearings from earlier this year and last year. And so that's obviously been a story from a monopoly perspective here in the U.S. as well. There's been European lawsuits regarding this as well, but this is the first country to come out and actually pass a law that forbids Apple and Google from forcing developers to use the internal Apple and Google payment systems. Now developers can bypass Apple and Google and use their own payment systems. Once again, I think it's kind of a non-story for today, but certainly can have traction moving into the future.
Yeah, glad you caught that one. I had missed that one, so appreciate that. All right, very good, guys. Let's move right into the Queen's Court. Last thing we do each and every Tuesday, actually, it's our segment we have with Coach Emily, where the head of the Dynasty Investors Trading Lab here at Tackle Trading, we get to submit her a pick, a stock pick, whether it's an investment idea, trading idea, you name it. We get to make that decision. She gets to decide whether it's good enough to live another day or whether we get our heads lopped off. And I see the executioner does have his sword over here with Coach Matt. His
First of all,
it's his favorite thing.
Always have my sword.
That's right.
I'm just telling you, bro. I'm just saying, take deep breaths. We do not want to be a YouTube.
I'll Sir Lancelot it right now if you don't stop.
I'm just saying.
Queen, you're up. Where do you want to start?
Oh, let's go with the dude with the sword. I mean, geez,
That's right.
How can you ignore him? Let's have Matt go first.
Well, technically, I'm still dead from last week, but we'll act like that didn't happen. No, I kid. Like I said earlier today, I don't really need to detail the analysis here for Queen's Court. I've discussed it a few times over the course of the last week, and obviously, I gave the analysis here earlier today. But when you're looking at the Queen's Court, my Queen's Court pick here today, Queen, I'm looking at the combination of the analysis on gold's price recovery over the course of the last 3 weeks, looking at GDX to really kind of continue that type of price movement that got front run on gold. Nice little recovery. I just love so much. There's so much that I put into the zone. Like you heard me on Chico say, I like the four handle, right? It's because I like that hypothetical scenario of that support playing out. I can see it playing out in previous cycles in Chico. And so here on the zone, you're looking at a really good zone of support right there between 30 and 31 on GDX. You look at that on the weekly chart, you see that same zone over here get tested multiple times. And you come in here, and the only question is what stock is kind of your pick of the litter in gold, because you got a lot of, I don't want to say you got a lot of great gold mining companies, you got a lot of similar gold mining companies. And so you got your Barrick Golds, and you got your Gold Cores and Rand Golds, and you got your, KRs of the world and AUYs of the world. And obviously you could very easily just come out and just play GDX. GDX is a wonderful way to get access to all of the gold miners. Obviously, you have a little bit of silver and platinum and palladium and copper mixed in, a lot of that, but the primary tradable instrument there is gold because of the mining. So you can certainly just come out here and you could look at GDX and get all of that diversified basket there. Whenever I'm looking at this type of analysis, though, from a stock perspective, I typically go to Newmont Mining and then Barrick Gold, which is the biggest gold company in the world. I like both of them. I cannot really point to any discernible differences from a fundamental perspective, and quite frankly, I can't really do that from a technical perspective. I feel they both work out in identical timelines. You get fairly similar cash flow from both of them. But when I looked at the fundamentals here today on Newmont and gold, I had the same conversation I did last year in December when I was deciding which one of these stocks to put on the Tackle 25. Barrick Gold, they got the nomination then. They're going to get the nomination again. I love the fundamental nature of this company. You're talking about a company with a 14 PE ratio. The sector has a 14 PE ratio. Forward PE ratio looks perfectly fine as well. You don't have valuation concerns here. Technically, you're at the low price on the chart. You got to love that support level. And while I said we're still in the hypothetical recovery situation, I do like the zone to start accumulating. And I don't even like it from a naked perspective, because I think you want to start the accumulation now. And I think you want to start cash flowing now. And I think you want to open up the risk graph when you do see those breakouts, when you do get that nice little pop and GDX starts that recovery process. And so I like an equity position for Queen's Court, and you got to kind of play around with the monthlies here. Obviously, we only have 17 days left to go in September. That's too short of time frame here, and so I do like working either the 31-day weekly, but because this is Queen's Court, I'm going to come just to systems, and systems do go to monthlies because of liquidity. And so I'm going to go out to October. That allows us to sell that 34 Delta call option, the 21 strike price, bring in $46, $47 of cash flow, which is about 2.3% return on investment. You also get cherry on top here, Queen. Cherry on top. You like cherries on top of ice cream? Everybody does. Okay. Cherry on top, 4.3% dividend on top of that. You're acquiring at the low price. It's a fundamentally solid company. You can cash flow on it in the neutrality or where the risk is perceived, and that's at the low price. You open up the risk graph as you start to break out and start trend. I love the game plan here. What do you think?
I will let you know my thoughts after everybody else is gone, but thank you for
I look forward to you killing Mark.
Well, my queen, may I add something to Barrick Gold?
Yes, you may.
I actually last night thought I was going to go Barrick Gold with my pick today, and then some news broke on the company I chose, and I went a different route. So I did,
Yeah,
additional
the news
research.
Broke when he asked me, and I said I'm going Barrick, and he said, okay, I'm going to pick
whatever
my
the news might have been, the news broke.
I kid.
But one of the things, Barrick Gold, about 10 years ago, they had a huge debt problem. Their credit was downgraded. There was even like those rumors that you heard of, like from ExxonMobil last year of bankruptcy. Their debt has just went in a straight line down over the last 10 years, to the point where the company actually has become oh, what was the exact number? In 2020, reported $3.4 billion in free cash flow, an important metric for me on the stability of a company,
Yep.
to say the least. I mean, that's a whopping free cash flow number for a blue chip company at these valuation levels. You know, they're diversified mining operations, but you know, a lot of them, there's less geopolitical risk. Like all of these blue chips, they have operations everywhere around the world, so you never know when a mine flare up or a worker strike or geopolitical. I mean, they have so many in Nevada. You know, less geopolitical risk. Those were some of the additional things I wanted. Even though Matt wants to chop me off with the head, I thought it's.
Nah, I don't want to chop you off. I gave you, what are you talking about? I gave you Chico Fa's earnings report today. I'm
So,
on
anyways,
Coach
that
Mark's
was, you know,
side.
but I live to serve the queen, no one else. So I thought I'd provide that information.
Thank you. I
Thank
appreciate
you
it.
for that.
Okay.
While you stay there, Mark, and just go ahead and present your pick.
I do not have a nice conservative pick like Barrick Gold. You know, listen, like I said, there's two things I know in life: women's clothes and sports betting. Give me Fubo, Fubo, Fubo TV. All right, this one is a ride or die for me. I have been interested in this company since it became public a little while ago, just because it was a niche little company. I like things that have uniqueness to them. It's why I always like Netflix at the start. You know, just, you know, something that doesn't really fit into the box. Well, is it cyclicals? Is it text turn? Is it defensive? Something that is just its thing. And Fubo, if you do not know what Fubo is the world's only sports-focused live TV streaming service. So, you know, we have a streaming play focused on sports, you know, kind of a groundbreaking type of company. You know, this is a high-growth company. And, you know, whenever you have these niche little stories that start out, because we're at the very beginnings of this story. We're at the very beginnings of this story. Well, what I always am interested in are a couple key metrics. You hear me talk about this on Roblox, for example. I don't care. I want to know revenue. I want to know users. I want to know that you are growing. I mean, because like we say, growth company got to grow. It has to. I mean, it's what gives you validation on whatever your thesis you have. Because I can have, hey, I like streaming companies. I like sports betting, and we're going to get to that here in a second. I can like these themes, right? But if I'm not growing, then, you know, well, what's the point? Well, for those new to Fubo, the company has beaten and raised its subscriber and revenue guidance every quarter, every single one, without exception, since going public last year. Just had earnings a little while ago, added 91,000 new net subscribers, bringing their recent quarter up to nearly 700,000. Smashing analyst expectations of 600,000. They also, in this, like, it has just been a non-stop guidance upgrade. Like I said, every quarter. They raised their full year subscriber guidance to just shy of 1 million at around 910 to 920. And that was up 100,000 from its previous guidance. Revenue, 196 growth year over year, beating analyst expectations. I mean, this company raises guidance and beats, raises guidance and beats. Subscription revenue, ad revenue, all of the key metrics in which they gain revenue have been going up. Another key metric that I look at on these type of companies that, you know, there are new subscription type models is how much engagement, how much retention. You're seeing numbers in all of these areas be very healthy. They are not only growing their audience, but they're retaining their members, which is probably why they keep jacking up guidance, because they keep retaining at higher and higher levels as well. So we got a new company, new product, new idea out there in the world that is starting to show, you know, this is one of those things that when you like start to get really interested in a company, we talk about this all the time. Like, you know, new company comes public. Well, we want to see it in the numbers for a while before, you know, we can spec and we do a little bit here and there, but we want to see it in the numbers, and we want to see that it is in fact growing. And I think the consistent raising of guidance, the consistent growth of numbers is a good solid foundation. That's not the reason I'm so excited though. The reason I am so excited about Fubo is what Fubo calls internally, their management team calls the flywheel. Now, the flywheel, an internal phrase to describe this, is the products that they are launching in the coming quarters that will not only add revenue streams, but will help reinforce like this ecosystem engagement within the app and product itself. They are launching Fubo Sportsbook, which was essentially trying to tap in to the online betting theme. The DraftKings, the Caesars, the MGM, the Penn. I mean, sports betting is one of these. Everybody sees it coming. We've been talking about tackle trading for, well, I don't know, years. This broad thing pushing to online betting. The legalization, the social acceptance, knowing governments need the revenue streams because we know they can't be fiscally responsible, knowing that these online betting was going to be more and more in theme. And you're also seeing it culturally in like the NFL acceptance. Like the NFL has fought against online betting forever, right? Lay down the hammer, making a lot more of those type partnerships. So we're seeing that big picture theme play out. From a broad scale, which is why, I'm sure Tim owns DraftKings. Different people have different areas of the Penn National gaming. I mean, all of these, everyone has their fan club on the particular and have a case for that. One of the things I love about the potential of Fubo and sports betting is this flywheel concept where there is this integration between live stream video and the sports book itself. This is a unique feature for Fubo TV that the sports betting app will allow its users to watch and bet from the same platform. Totally unique. If this thing hits, and the concept of being able to place one's bets while on an app while watching sports, nobody else has something like that. For somebody to do something like that, they would have to create media partnerships. And so let's say someone does pull that off. I don't even know how that would work because I can't even see logistically, because I've thought about this many a night. Like logistically, how would a DraftKings, how would they create the media partnership and the app? It just seems like a lot of cumbersome that Fubo is building within its product itself. They're also doing a lot of online free games, interactive games on soccer matches, and this offering prizes, versions of fantasy type games and sports interactive games, all intended on this flywheel concept to create user engagement within the app, within the ecosystem itself. So this sports betting concept, I think it is a massive potential opportunity. And you are starting to see the regulation dominoes fall. Just this morning broke that they had gained approval in Iowa with the Racing and Gaming Commission. This is following on the backs of several other states where they have started to get the regulation approval in partnering with different casinos in different states. Those regulation dominoes are starting to fall, giving them access. Sports betting isn't alone. They recently had a partnership deal with Vizio and LG Electronics, putting the app of Fubo on the TV itself. I think this is equally massive. We've seen how this worked with Roku. Part of Roku's huge success and subscriber growth came from partnerships with TV brands. And these type of partnerships, giving accessibility, giving brand recognition, which is still low but growing, as we see in the subscriber numbers. These type of TV manufacturing partnerships, huge part of Roku's growth. I think there is similar type growth opportunities there. I'm not alone in this. Analysts have came out recently from Evercore, jacking up their price targets. Here's a couple quotes. Cord cutting as viewers shift away from linear TV to streaming, a mixed shift of advertising dollars to linear TV to streaming, and growing demand online for sports betting from an analyst from Evercore. Oppenheimer came out raising their price target. Most OTT providers have focused on low-cost entertainment offerings, forcing sports fans to remain tethered to pay TV. Fubo is exploring the opportunity in sports by providing a comparable viewership experience at a lower cost to its TV counterparts. I love the story of FUBU. This is a go long, own shares for me. Now, I will probably do something stupid like sell a low delta naked call, not naked call, covered call at something like, oh, that's way out of the money. I'll just get a little bit of credit and probably get called out and look back like I do, because I tend to like try to cheat the devil sometimes. I love the pure growth story here. I love the long. It is a company I would be delighted at if it fell in price to actually build a sizable position. I love a starter position here on the growth story on the potential of FUBU with numerous catalysts along the way. I think the continued guidance will continue to be strong. I see strong growth here. I see good opportunity here.
Hey, Chucky, can I offer a suggestion on that covered call?
Don't sell it.
It's your no.
No. I said I will probably do something stupid. That's not what I'm recommending.
But what I'm suggesting, it's your pick. I'm not going to add to your pick unless you want me to.
No, go ahead.
Okay, if you are going to sell that covered call, I do see a very simple management technique right here. 26 delta call option, $35 strike price. You're selling deep out of the money, right? Now volatility is high here. Volatility is high here. But if you're going to sell a high volatility covered call, the one benefit you have is the range. You get to sell deeper ranges. You can still get legitimate cash flow. You're getting $1 against 29. That's legitimate cash flow here. You're selling a 27 delta, and here's what I do like about it, right? Because I typically do not like covered calls with 71% implied volatility. Here's the combination of it, though. You can sell the 35 strike, which coincides with some major resistance levels. $35 on this weekly chart. If we break this out to the weekly, $35, $35, $35. You basically say, I don't care whatever happens underneath 35. I'm just going to rip that cover call every single month. If it ever breaks 35, you buy that thing, you open up that risk graph, and you let that sucker fly.
I forgot one critical point. Will you go to a daily chart, Matt? Because I always like, I'll develop my long-term themes, analyze the fundamentals. I love a support test that gets support level that gets tested multiple times. So underbelly has had huge, and this, high volatility fits into the underbelly. Huge volatility
100%.
in the last, a couple months. And boy, it came down to 25 over a period of a month, 9 times. Bounce. Like found buyers every single.
And it wasn't just this stock in this space. Take a couple peek at a couple other stocks in this space. So you got TGNA. You see the same type of consolidation in the same time frame. Look at that trigger there. Same space. When you look at FUBU, you're seeing the same type of consolidation in the same space. When the other one I was looking at, I'm trying to find it. Nope, that's one. I had one more example that I really like. If you'll just give me 1 second. I got too many screens up. Oh, anyways, Fox 8's kind of doing the same thing when you look at Fox. And so the entire space, not the entire space, but a lot of what we're seeing here is you've had short-term pain, consolidation towards the lows, multiple tests. I think you could have a little bit of, and it's not to discount FUBU. It adds to FUBU.
I think it does, absolutely.
It adds to FUBU. I'm saying the sector is showing it. The industry is showing it. You're seeing momentum in the space. I think that does add some credibility to the FUBU commentary.
And so when I see a technical, because, got a lot of choices out there, right? And when I see a technical situation develop, I'm like, it breaks a lot of ties. It breaks a lot of ties for me when I'm analyzing companies that I like. I like FUBU.
And I'll tell you, FUBU's not my company, but
I appreciate the analysis.
I really enjoyed the detail of the analysis. I really enjoyed that, Coach Mark. Thank you so much for that.
Well, I don't care if you liked it. I care.
Listen, I still appreciate it after you get killed. We're good.
The queen is in charge. I want.
Oh, goodness gracious. All right. Thank you, Mark. Tim, you're up next.
All right, let's do it. This one's going to be real simple. I'm going to lay it out pretty directly here. Give me CRM if we can. And a couple things. Number one, and we can even start with technology real quick, Matt. XLK. CRM is a $260 billion juggernaut, obviously mega cap leader in the technology space. It's not performed well with technology recently. It's starting to pick itself up. Tech is our top leading sector right now. Obviously it has got real, a bullishness in terms of that bias. If we go back to CRM, it fits within the overall theme of technology improving, no question about it, but that's not necessarily the only reason I like it. That's just a little bit of gravy right on top. We covered earnings last week, and I got to tell you, I've been investing in CRM for years, and I really respect the CEO. I respect the vision. I like the business model. It's based on subscriptions. It's based on consistency. They don't have to have some big $10 billion sell every quarter to go out and hit their revenue numbers. They actually have very, very consistent revenue growth just from subscriptions alone. Over the last couple of years, they've been in acquisition mode. And if you missed, Tuesday's or Wednesday's show last week when we were covering CRM, there's a couple of things they've done. Number one, they bought a company called MuleSoft. They bought a company called Slack, which I think many, many people out there use. They also bought a company called Tableau, which is a data analytics company. All of these companies provide solutions to businesses to help them better sell things, Emily. And one of the number one most important things within any company, obviously, is going to be sales and revenue generation, because that's what continues to keep growth moving forward for a company. These acquisitions are all now billion-dollar brands that are building revenue on their own independently within Salesforce's suite of products, okay? And in the last quarter, they even upped their revenue guidance for the year. And I want to give you a couple of numbers on this. 23% on a year-over-year basis. Obviously, we all have had real strong revenue growth year over year. They increased revenue guidance to 26 billion, which, by the way, if you think about their historical revenue growth, I'll give you a couple numbers. 2017, they did 8 billion. 2018, 10 billion. 2019, 13 billion. 2020, 17 billion. 2021, 21 billion. They're projecting 2022 revenue at 26 billion, and that's consistency. That is absolute consistent revenue growth on a year-over-year basis. It's the way the business model is built. It's sustainable growth, and there's a reason why people have been willing to pay premium. This is a growth company that actually grows. And this is on the backs of, by the way, them increasing their shares into the market. One thing that's kept the stock kind of depressed a little bit over the last year, they have a share issuance program, not a buyback program. They actually are putting more shares out over time because they want more money to continue to invest in these acquisitions and grow. They completed the acquisition of Slack completely this quarter. And if you back out at the big picture chart, Matt, I think there's a storyline here because obviously as an investor, I've been tracking it over and over and over. They blew the doors out last year. You see that huge gap up that ran them from about $200 a share all the way to $280 a share. That created a high base consolidation. It was unsustainable. Then they announced a big acquisition of Slack in December last year, which brought the company back down to reality. They actually did it in correspondence with that earnings in late November, early December around Thanksgiving. The company took about 9 months here, to kind of consolidate, find a base, fade lower, get the technicals kind of in line, get this acquisition done. And now it's starting to shape up. This last quarter, they absolutely had a blowout quarter in the stock. It wasn't the standout earnings from the quarter. We had Dick's Sporting Goods and all that kind of stuff, but they had a very good B+ quarter in terms of earnings. The market rewarded them and gapped them out. Now, I don't like chasing a gap on earnings. I don't think anybody does, especially on a candle like that. But what you do like is you like the formation of these candles the last 5 days. If you loved an earnings report last week, you're waiting for stuff like that. I remember Coach Frank and Coach Matt talking a couple of weeks ago, and they were talking about what they like post earnings in terms of time. And I think they both kind of came to the conclusion, Matt, you can confirm this or not, one way or the other. I like that. But either they like a week pattern, 1 week of time for a quick flag or a quick high base and then a run, or that longer, like month-long pattern post earnings. Matt, do you like this post earnings candle formation the way I do? Because I like those 4 candles.
Yeah, I got this as a flag post earnings that filled the gap. And the only thing that you should be dinged on, and you should be dinged on it aggressively to the point of cutting your head off, is I drew that Fibonacci and you did not mention it.
I'm not going to go after the fib, but I do appreciate that fib.
You're welcome.
Patron.
You're welcome.
I thought you were going to say that he didn't address
Yeah.
her as the queen multiple times.
Oh no, he said Emily. He didn't even say M. He said Emily. Like,
He
and
just-
he said Emily, and I just got the sword out. I'm like, yeah, it's done, it's over. But it has nothing to do with the quality of the analysis or the pick, because legitimately, Tim, you mentioned their earnings. They had a very, very, very good earnings season. The only problem with the earnings report is the gap came into some very well-known resistance levels. You saw me draw it. You see the box up here, the highlighted box. That is the box on the resistance channel where it dinged the last time we saw that blowout just drive up in price. So that's kind of the resistance channel, but you got to love the flag here from a trading perspective with a little bit of a growth story building on CRM. So yeah, I'm definitely interested. But then again, it's easy to sell me on CRM. I'm a Benioff guy.
Yeah.
So like it's say Benioff, and I'm like, yeah, he's amazing.
Pretty much.
But in terms of the technicals, I think they're really solidifying themselves. Yes.
Well, and
I so want to say Benioff 3 times to see if he appears.
Dude, is it 3 or 5?
I think it's
by the
3.
way, if you missed the podcast last week, Coach Keith told a story about meeting Mark Benioff on that podcast. It was kind of a cool little thing. He was telling stories the whole time, but that was one. And he said he talked over him the whole time. You know, sometimes these guys with these big brains, it's
Yep.
hard to really connect to them on that level.
And
for
if you're
sure.
wondering where this week's Trading Justice podcast is, it will come later today.
Yeah, we're going to be doing it today. I do want to give you a couple quick quotes and some ideas on how to approach this one here, Emily. Number one, I'm an investor. This is long-term analysis for me. I love the short-term analysis to support the case for now instead of a different period of time. But I have been an investor for many, many years. I believe in the company over the longer period of time. These are solutions that businesses need. And as companies integrate these softwares, they don't get rid of them. You were talking about Zoom earlier, Matt, as the big major companies who actually build these tools into their programs, as they do that, Salesforce software, CRM software, sales automation software, they don't just dump that immediately.
That's even more difficult than the communication strategy at a company. Once you select a data company, it's more than a marriage.
Mm-hmm. Yeah.
You'll get divorced before you divorce that company.
I agree. And Mark Benioff knows that. He even said this quote here from the earnings report: with companies and governments around the world continuing to accelerate their digital transformations, we delivered our 5th phenomenal quarter in a row. He said our products are more relevant than they've ever been. And I think every CEO is realizing that the pandemic is not going away. We're in a new pandemic world, an all digital world, work from anywhere world, and they're going to continue to build into that. And I agree with that. I think this has been a transformation happening for years now into digital, work from home, using software, that kind of stuff for automation. This just accelerated. And I love where Salesforce is right now. If you ever need to do cover calls, options are liquid, as we all know, still net down about a 2% cover call return. It's not that high of a volatility stock, by the way, guys. This is not some crazy 70% implied volatility, 30% implied volatilities, very consistent in that regard. The options are fairly priced. Generally, a lot you can do with it. Still pick up a couple percent if you ever want to write them. Emily, I got CRM. That's my pick.
So you're not trading the flag. You're saying front run the breakout on the weekly with an investment?
No, I think you can enter on the flag for timing. It's going to go up and test the highs and probably stay there for a while. I think investment analysis is better because if you're entering now on equity, there's a couple ways you can approach it. Enter it now on equity with the flag. When it gets to those highs, write a covered call. Sure, absolutely. Those kind of mechanics are the way I would approach it if it's stalled there. I don't have this as an A grade directional opportunity, Matt, because we are going to be testing resistance at some
There's
point.
Some major resistance up there. Obviously, if you're going to really dive into the investor, you got to hunt for value, in my opinion. You can chase anything, but I think it's concerning with CRM at the highs. I like it better as a trade here, honestly.
Yep. M, you've got all three.
Okay. All right. Let's go back to the beginning and look at gold. So a couple of things on gold. Definitely, obviously love the space, right? As we are seeing the commodities start to kind of sort of wake up. Some of them are still neutral, but the great thing I love about cash flow is that, you know, I don't necessarily have to wait for those breakouts or, you know, technical patterns to, you know, form exactly to the T where I have to find a proper entry. You know, when I'm doing cash flow, I can just, you know, get in, whether it's a naked put or a covered call or anything like that. Love that support level at 18. And when you first brought this up, I was actually thinking naked put automatically, because that's where my brain goes. Anytime I see an inexpensive stock, my brain always goes on the naked put side, and I'm always thinking, how can I catch and pick it up, right? So that's where my brain automatically went. And I was, very much impressed with the ROI that you'd get even just by selling a naked put if you sold at 18. But then talked about a covered call, and I'm like, all right, yeah, whatever. But 2% ROI on top of a 4% dividend, not too shabby. So I actually do like going the covered call route if you don't already have exposure to gold. If you're just trying to get this as a cash flow and just add to your cash flow, then definitely, naked put wouldn't be a bad way to go either. For me, I probably would go covered call just to add exposure to the commodity sector. So I definitely like your play on that as a covered call.
So I heard I'm good. I'm alive.
I'm not done yet. We're not done. I'm just giving you your
I
good
already ran out the door. You can't find me. I can't.
good stuff. Let's go to Mark's pick. Fubu. Is it Fubu or Fubo? I can't.
I always say Fubu, but
I always
think
say
it's Fubo. I think it's
Fubo.
I just like saying Fubu.
Fubu used to be another clothing brand.
Yeah, there's a clothing brand.
Damien John, that he sold to. I don't remember who it was, but all right. So Mark, you are amazing in convincing me to look at areas and spaces of the market that I would literally stuff my nose at. I'm like, what is that? So this one here, again, is something that I probably would never come on, in my radar, because this is not something that I would probably even search for. But how you put together the, your theses and the theme around it, and explaining all of that stuff is really, really convincing. And I love the fact that, Matt always talks about this one, when something has tested support, that's where you can build a house, on that support level there at 25. I love that. It's crossing all the moving averages right now. You sold me on everything that it's doing. I don't even know anything about it, but you just sold me on the whole gaming thing and, the social acceptance and regulations being uplifted and all those things. I'm good with that. Would I do a naked put? I don't know, probably. Would I go directional on that? Or do a covered call? That volatility, I saw that 71 and my face was like, ooh, do I want to do that? Yeah. Oh, okay, here's the thing. 5-year-old me would have jumped at that volatility like it was nothing and just done a covered call and just not even look back. The queen is a little bit more old fashioned now, right? So she likes, just good stuff. So I absolutely love it. I love where, the covered call idea and really going way out of the money. So for somebody who, definitely wants, exposure to this area of the market, that's a great strategy. Naked puts would also work as well, right? So either direction would work for that on the cash flow. So, it's another cash flow play. So how can I not like it? But then there's CRM, which I absolutely love. So you guys really brought some good stuff, and I'm having a hard time trying to pick who I'm going to chop off, but I have to pick somebody to chop off. I haven't played CRM in quite some time, so this is something that I'm definitely going to add back to my watch list here with CRM. But, again, CRM is CRM. You can't question that. So it comes down to, do I want to add exposure to gold, or do I want to go off, and do something, crazy because Mark has convinced me with Fubo? But I'm the queen. I can't. I cannot. I have to stick with my old fashionedness. So Mark, and not for anything wrong with what you brought to the table. I absolutely loved everything about it, but the queen is very, very old fashioned. And I actually thought when we started the halftime report today that you were going to give me something in commodities and oil, because you said that you added exposures. So I thought you were going to give me an oil pick, but you didn't. You brought me Fubo, which is not bad either. But just get to to the point. Yeah, I don't want to do it, but I have to, and I have to go with Mark this week, but not for anything that you presented. You know, you convinced me. Normally, I would chop your head off on stuff like this, but your theme, your thesis, your everything is very, very convincing. But you know, when you present CRM and gold in that mix, Queen has to stay old fashioned.
Well, I only have two things to say.
You're dead.
One, I don't mind making money on my own. And two, how about them Cowboys?
We warned you, Em. We warned you. You never want
How
Mark
them
on your team.
Cowboys?
Yeah, good luck beating Brady on week 1. We'll see about that.
Yep.
Now you cannot go back to
Oh,
being a
man.
Washington
No,
fan.
Washington's still going to win the Super Bowl. But,
Oh.
you know, I can still taunt.
Oh, goodness gracious.
He's going to get his head cut off 14 of the next 17
and another
weeks.
thing on Fubo, go back to that weekly.
Oh, now she's letting it go.
I really do love it. No, I do. Because I forgot to mention that. The weekly chart, that cup and handle that's forming on the weekly on Fubo is really, really, really beautiful. So again, nothing wrong with what you presented. Absolutely just a great pick. But between you know, gold and CRM, Fubo's got to go.
Well, now that Mark's dead, we can take his pick.
Yeah.
That's right. It's a great analysis, actually. A lot of fun here. The Queen has spoken. I live another week. I'm going to run and end the segment before I get my head chopped off. Let's start moving into the back end of our show here on a Tuesday. Great job today, everybody. Let's get some final thoughts. Mark, you first programming notes.
Listen, you know, a lot of stuff. I've gotten this question both in my lab and from just, you know, tackle trading members. You know, bottom fishing, some of these things, and this going up, and they got covered calls. How do they manage? I've had a lot of covered call. How do I manage when things are going up, covered calls? Thought it would be an appropriate topic for the coaches show tonight. Going to have Tyler Craig and Gino Poor bring how they manage covered calls in those situations. When do they roll? When do they roll up and out? When do they just buy it back? What technical signals do they use to make those actions? Going to talk about covered call management to the upside on the coaches show tonight.
I have such a belief in that conversation that I truly believe if we had that conversation on covered call management, when to lock that risk graph down versus when to open it up, if you had that conversation every week for the rest of our lives, it would be helpful.
Mm-hmm.
That's the importance of that conversation.
You know, Matt, it's so true because every person, listen, I believe we can beat the market, this and that, but we always want to maximize our opportunities. Like, I'm okay making money. I would like to make a little bit more money, and covered call management makes such a big difference. Adding a few percentages here and a few percentages there. It's a big, especially if you're a cash flow person.
It's the number one decision you have to make as a cash flow trader with covered calls is when to take the call off. And because on downside, covered call downside management, I actually prefer because it's simple. Easy. It's very simple. You write the covered call 40 delta as it goes down. Net liquidation is going to contract. And once it gets to 80% of net liquidation, you just buy it back. Rewrite, offset loss. You're fantastic. You don't even care. Covered calls on the upside.
On downside for me, it's really easy. It's like, screw you, market. I'm right on SoFi, but I'll sell
psychologically it's easy
in the meantime.
Yeah, but psychologically on the top side, it's like, but if I take that call off and it goes down, I lose my protection. Psychologically, it's a little more difficult on the top side. But I feel the importance of the conversation is just, again, you could have it every week.
Yeah. Don't miss it, guys. Pro members, don't miss it tonight. I'm looking forward to it. I'll definitely catch that one as well. Maddie, any final thoughts for the team out there?
Final thoughts for me, just Trade Just Podcast, usually on a Tuesday. We've sent out our email, put it in our tackle today, and let everybody know kind of our detailed thoughts in the Trading Justice Podcast. But unfortunately, we did have some technical challenging environments yesterday, and because of that, had to shelve the podcast. So we're going to be redoing it here today and releasing that as soon as we can. So definitely check out the Trading Justice Podcast later on today, and you can check that out on any of your podcasting apps or right there at TradeJustice.com as well.
Looking forward to that as always. Emily, thank you for being here and holding Queen's Court and not chopping my head off for this 1 week. We'll get out of here for another Tuesday. Appreciate everybody out there. If you've not done it yet, click that subscribe button, click the bell. We go live every day. The markets are live, 12:30 Eastern. So come back and join us. And if you want to join that coaches show tonight, you're not yet a pro member. There's a 15-day trial link in every one of our YouTube videos just below. So go and grab that and come and join us tonight. See everybody tomorrow.
Later, Team Tackle.